Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager and education coach here at Schwab, and this is advanced charting techniques. You know, I was looking at the chart of the Dow Jones Industrial Average, and a lot of you may already be familiar with this, but it has been down 11 days in a row up to yesterday's close, and we haven't seen that in 50 years, since 1974. I'm only 52 years old, so this is an extreme event. So what I thought I'd talk about today is how does a trader trade extreme events? How do we identify potentially extremes on charts? So we're going to be talking about two types of extremes, extreme quiet and extreme volatility. Talking about three different indicators that might be used in combination with one another to help a trader potentially identify those extremes and hopefully position the trader to maybe benefit from them. So we're gonna have a great discussion here today. Before we can get into that, though, let me first of all say hello to everybody that's already chatting in out there in YouTube. Great to see Ricebird and Speak Truth, Wiley, Chris B, Will, Greg, Ocean Life, Life in the Fast Lane, Sharon, Michael, Josh, everybody else. Thanks for being here week after week. We always appreciate your attendance and your contributions to these discussions. If you're here for the very first time, or if you're watching on the archive for the first time, enjoy. Great to have you here. But also, if you are watching on that archive and you'd like to join us in the live stream, this is a Friday webcast series. It starts at 1 Eastern. We'd love to have you here in the live stream. So just put that in your calendar. Fridays at 1. And I also want to throw out the heads up that my very good friend Connie Hill is going to be hanging out in the chats with us. Connie's going to be addressing any questions that I can't get to just during the natural flow of the presentation. So thanks for being there, Connie. And Connie and I would also like to issue an invitation to everybody watching, whether in the live audience or you're watching on the archive. If you're not following us on X, please do that. It's a great resource to connect with your favorite presenters in between the live streams. You can find Connie on X at Connie Hill CS. You can find me there at Karen May CS. All right, so let's get right into this. First thing that we always need to do is pause to consider the risks associated with trading or investing. Risk is real, so bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, investment strategy. While Schwab does not recommend the use of technical analysis as a sole means of investment research, investing involves risks, including the loss of principal. Any investment decision you make in your self-directed account is solely your responsibility. All right, so let's get into this. So we're talking about market extremes. I thought maybe there's going to be one or two people in my audience today who are thinking, wow, with the markets having come down so far, have we reached an extreme? Is it possible that the markets could start to turn and go back in the other direction? And is there anything on a chart that might have indicated that? Now, as the day is panning out, so far at least, prices do seem to be rising against that recent trend, so we'll see if we can close out the session that way. But what are some technical indicators that are sometimes employed by traders to hopefully try to spot these things and potentially even advance before they even just play out on their own? So that's what we're going to be talking about today. We're going to be combining three possibly familiar indicators. We're going to be talking about Bollinger Bands, Keltner Channels, and the ultimate oscillator, used in combination with one another to identify potential extremes. And that we're going to be looking at both ends of the spectrum, looking at trading quiet extremes and moving to those periods where we've hit volatility extremes. So yeah, I think that's a great topic. Let's go right to the markets. Let's look at the Dow Jones Industrial Average, since I've introduced it as sort of the topic of the day. But there are those red candles I was just talking about. We've not seen a string of 11 red candles like this in 50 years. So could a trader, maybe apply this label already of this being an extreme trading environment? I think there could be a case made for that. But I want to talk about how traders identify extremes, either on the quiet end or on the volatility end, and how they might structure trades around those extremes. And there is, of course, an indicator that a lot of you may be familiar with. It's one that we've talked about on several occasions in this webcast series in the past, and it's called Bollinger Bands. So as I add this to our charts, chat in, let me know how comfortable, just are you familiar with Bollinger Bands? Just a quick yes or no. That'd be great. By the way, hello there, Robert and Dragon Rider. Great to see you too. let's go up here and edit our studies. I'm going to start to type in Bollinger Bands to retrieve that from our list of available potential studies. Let's choose Bollinger Bands. Add that to our chart. If you need a quick recap, a Bollinger Band is built around a 20-period simple moving average with lines drawn above that moving average and below that moving average, spaced one standard deviation above and one standard deviation, or pardon me, two standard deviations above and two standard deviations below. Okay, a lot of you saying yes, familiar with the with Bollinger Bands. If you're not, I do have some resources. Let me click apply here and click OK, and we're left with our Bollinger Bands. But if you're not familiar with it, I'm not going to go deeply into the weeds and how these individual indicators are built. I've done that in the past. For each of these, what you can do is go to the channel. If you're interested in, let's say you don't really have a lot of familiarity with Bollinger Bands, you can just go to our Trader Talks channel, and while there, make sure that you're subscribed to the channel. But go to our Trader Talks Schwab Coaching Webcast channel homepage here and just click on the search link and type in Bollinger here. So as we load up Bollinger, you'll see right there, Beginner's Guide to Trading Stocks with Bollinger Bands. So this will spend more time on the construction of the indicator than I'm going to give it today. Today, since we proceed at a little bit more of an intermediate to an advanced pace here, I'm going to leave it at that. Okay. But so here are our Bollinger Bands. We have our 20-period SMA identifying the potential trend of our index in this case. And then we have our upper band and our lower band representing potential quote unquote extreme departures from that trend line. Now I have a question for those of you who have already self-identified as familiar with Bollinger Bands. There is a technique commonly used on Bollinger Bands to identify possible quiet periods that might be a setup for an entry in a trade using Bollinger Bands. What do we call that? What do we call that time using Bollinger Bands that identifies the quiet period? So we're looking at the quiet end of the spectrum for extremes. And Paul, okay, there we go, Chris B. Paul had actually referred to a different technical indicator with this keyword in it. Yeah, Chris B says a squeeze. Yeah, Bollinger Band is an attempt to identify extremes on a chart. And sometimes those extremes are fairly wide between the highs and lows. Sometimes they're fairly narrow. When we get a narrowing of those extremes, we actually call that a Bollinger Band squeeze. So examples of that narrowing, we can see that here. We can see it probably here. We can see it here, where our upper band and our lower band are coming together. They're moving toward one another. There was another squeeze example here, but there are a whole bunch of others. This could have been a squeeze. It started squeezing back here, bit of a squeeze right there. To some extent, the quote-unquote correct identification of a squeeze is somewhat in the eye of the beholder. So, for example, here you can see our upper band starting to move down right here in the first couple of days of August. Our lower band was already moving up, so as that lower band is moving up and our upper band is moving down, couldn't we call this also technically a squeeze? Yeah. Now, is it the type of squeeze that a Bollinger Band trader would use to structure a trade? I would say, I would make the case that probably not, because the bands never got terribly close to one another. But that sort of then begs the question, well, how do we identify as a proper squeeze? How might we standardize this approach? How might we identify a quote unquote a true quiet period in an index or a stock, and then start to plan a trade around that? Well, let me do this. I'm going to right click here, clear off our drawing set. And for just exactly this purpose, some traders will actually introduce another volatility or extremes indicator, similar in its construction to the Bollinger Bands, but they bring it in to help them eliminate some of that discretion in identifying squeezes. Maybe automate the process, make it mechanical for the identification of squeezes. So let me do this. I'm going to go up here and add a second indicator as I click Edit Studies. I'm going to revisit. This is an indicator that we just went through a couple of weeks ago, and it's called Keltner Channels. As we click Add Selected, you're going to see some similarities here already just in the characteristics of the two indicators. There's this number 20. That's because both of these are centered around a 20-period simple moving average. So simple and simple, 20 and 20. What we're going to see as a distinction here is our Bollinger Bands makes reference to the number 2. Our Keltner channels make reference to the number 1.5. So as I click apply here, actually, let's not, I'm going to make one change to our Keltner channels. But our Keltner channels are similar to Bollinger Bands in that it's an effort to draw an envelope around a 20-period moving average to attempt to identify extreme highs and extreme lows on a chart. It's just the definition of extreme has been changed somewhat. Instead of using 2 standard deviations, our Keltner channels are actually built around average true range. Now, that's a simplification of that indicator. I went deeply into the actually precise construction of this just a couple of weeks ago, and I'll show you that in just a moment. But I am going to make a little customization here, just because when I apply the Keltner channels, you're going to see we're going to have 4 lines, or actually 5 lines. And it gets a little bit tricky, especially if you don't have great distinction in your ability to see the difference between subtle color variations on a chart. Can't really see the Keltner chart, which one's the Keltner channel, which one's the Bollinger Band line. So I'm actually going to change my Keltner channels here a little bit. Let's click on the little customization gear, and I'm going to change the upper band and the lower band. First thing I'm going to do is change the width of our Keltner channels. So they're going to be a 3 out of 5 width instead of just a 1 out of 5 like our Bollinger Bands. I'm also going to change the color. Let's make those black. Come on, black. I just changed. There we go. Lower band, just the same thing. Let's change the thickness of the line and the color of the line. There we go. Now we're going to click OK. We'll click Apply and click OK again. So now that should be a little bit clearer. The thin lines are our Bollinger Band upper and lower bands. The black line is our Keltner channel upper and lower channel lines. And then right in the middle, we still have our 20-period simple moving average. It's the same for both. So what some traders will do when they've added a Keltner channel, oh, by the way, I did say that I was going to give you a resource for Keltner channels. Of course, if you don't know anything about Keltner channels, if it's brand new to you, you can just come here, type in Keltner instead of Bollinger Bands, and here we go. Keltner channels, how they're built and ways to use them, okay? It's a webcast that I did just a couple of weeks ago. But going back to our chart, the potentially very handy thing that our Keltner channels can now do, because they actually use a narrower range for identifying extremes, when overlaid onto a Bollinger Band, for some traders, it helps them to, in a more automated, a more mechanical way, identify what they might consider to be legitimate squeezes. So as an example here, look at this period right here. This might be considered by a trader as a squeeze scenario for a Bollinger Band, who uses Keltner channels as the filter for the identification of the squeeze. The squeeze here being identified if our Bollinger Band, if our upper band and our lower band get inside the 2 Keltner channel lines, then that is now the definition of a squeeze. We've really fallen inside about a 1 ATR range of recent prices, meaning that the stock has gotten fairly quiet. And it's kind of like a trope in Hollywood. Have you ever heard this, right? You almost know that it's coming when you're watching a movie and somebody says, boy, it sure is quiet around here. Almost too quiet, right? Yeah. Do you ever feel like that as a trader? Wow, stocks sure have been quiet. It's certainly been calm. It's almost too calm. Could be the calm before the storm. That is the technical assumption of behavior like this. Chris B says, could we be using the TTM squeeze? Is this basically a different graphical representation of the TTM squeeze? It is. Yep. So for those of you who use a TTM oscillator, you could use that conceptually in place of this combination. I think for some, this is just more sort of visually appealing to the concept that we're trying to approach here. Plus, there's an additional, I'm not going to incorporate both the TTM squeeze and these two indicators. I'm not going to be doing that today. But there's a benefit here to actually having the Keltner channels displayed. I'll talk about that in just a moment. But yeah, the identification of sort of the squeeze event could be seen on a TTM squeeze. Anyway, so, but this might be seen as the calm before the storm. Now, here's the thing with a technical trader who uses this approach, they don't know how that storm is going to manifest itself. We're going through conceptually a quiet period here that may signal the stock is about to do something. It hasn't been doing much, but it might be about to do something significant. What is that significant thing? Well, it could go up from this quiet period, or it could go down from this quiet period. So once a squeeze has been identified, that's sort of the setup for a potential entry. How might the trade be structured from this moment? Well, in this case, the trader, and I might zoom in here. Let's zoom in so that we can see this in a little bit better detail. So here's our squeeze right back here. What the trader might look for is to watch for price to rise above, either price to rise above our one of our channel lines, rise above the upper Keltner channel line, or if price happens to fall down below. It's just in this case it went above. But in any case, whichever direction price breaks out, a trade might be planned in that direction. Now, in this case, it broke to the upside. Now, I will say there's a variation on this theme. Sometimes a trader might just look for the Bollinger Band lines themselves to move back outside the Keltner channel range. That's going to generate similar but not identical signal, typically. But in any case, once we get a break above, that might be the entry. So where might the trader plan an exit? Well, with any entry, there are a couple of potential outcomes. Either it could turn out to be profitable, or it could turn out to be unprofitable. So planning for the fun side of the trade first, how might a trader plan a target? And this is where having the Keltner channels on the chart might add additional benefit in the planning of that side of the trade. A common target plan is to look at the depth of the channel as of the moment of the breakout. So it looks like right here, we got that breakout. And the depth of the channel on that breakout was this distance. Do you see that? So price has just moved above our Keltner channel line. It's closed outside that line. So there's our entry. So the target might be, well, we're just going to take the depth of the channel. Let's duplicate that and tack that on as our target price, right? Now, in this case, it looks like it took some time, didn't even quite get there here, but pretty close. But that's how a target might be established using this sort of an approach. So that's if the trade goes well. That's planning for the fun side of the trade. Well, we also have to acknowledge that a trade sometimes just doesn't work out. So when might the trader get right back out? Well, in this case, they might recruit their simple moving average line. And if we close below that simple moving average, trade might be over. So we're making a plan for taking profits, making a plan for managing losses. Now, as is typical, there can definitely be different approaches on these themes. It's not everybody places their targets in this way, nor does everybody manage their stops in this way. For others, they might just look at the breakout level as an example. Let me just give you an example here. Our breakout level was right about here. I'll just draw that through there. And they may just put a stop 1 or 2 percentage points below that. Okay, I'm not saying that one approach is superior to the other. What I would suggest, if anybody's experimenting with a new approach to trading charts, write up a plan, put that plan into action through a series of a number of trades, and see if the stocks that you tend to favor work with one plan or another. Trader has the flexibility. If a plan isn't working, tailor it. So that's sort of a plan for identifying quiet extremes and then making a trade plan for those extremes. So how do we identify it? Well, using a combination of Bollinger Bands and Keltner Channels to identify the quiet period in the form of that squeeze. When do we take an entry on a breakout of the Keltner Channel? When might we take a profit if the stock doubles essentially the distance of the channel? So in other words, we're basically going up 3 ATRs upward on a Keltner channel depth of 3 ATRs. That's a simplification. When you go watch my video on Keltner channels, you can see that's a little bit of a simplification, but it sort of paints the concept. And where might we take losses? Well, it might be just back inside the Keltner channel, just below the recent the breakout point, or it might be using that simple moving average. All right, so that's for quiet extremes. That's probably not even terribly interesting for everybody. They want to know, it's been more of a volatility extreme in recent market environments. Cameron, how might we use charts to identify these extreme levels achieved by volatile markets, and where might those reversal points be? How might we make a plan for a trade for those? So in this case, we're going to leave these indicators on here. Let me erase these drawings. Let's clear our drawing set here for just a moment. By the way, we're using the Dow as though that's a tradable security. I'm just using it to illustrate the concepts. If you could just envision an individual stock, we'll get some examples with stocks here in just a moment. But sticking here with the Dow and sticking with our Keltner channels and our Bollinger Bands, there are other times when our Bollinger Bands are outside the Keltner channels. And for some traders, they'll actually just look for a contraction of those bands as a signal that a recent breakout in whichever direction, it might be faltering and there could be a reversal coming up. So here's what I'm talking about. When we start to see our Bollinger Band, when our Bollinger Bands start to narrow toward one another, like they are right here, it might be a signal that stock prices are hitting a reversal point. Let's see if I can find another example. Recently, there was a narrowing. Now there was a narrowing right here. You can see our upper band coming down, our lower band going up after going out and widening. So it might be signaling that we're shifting into maybe a new squeeze period. But we just remove those drawings. But while the bands are still widening, that may be a signal that, in order for us to draw lines around recent volatility, we've got to draw wider and wider and wider lines. It's just a reflection of increasing volatility. And that's when the storm is basically raging. Well, for some traders, the hotter it gets, the more excited they get about the potential. Because when we get an extreme move in one direction, if we could just get a reversal of that and try to catch it, as close to the tipping point of that extreme as possible, maybe there's a lot of opportunity in the opposite direction. That's a tough call, though. When are we going to start to reverse? Bollinger Bands tend to lag. So waiting for the contraction moving into kind of a squeeze might be too late on that reversal. So this is where we might recruit another indicator that we've discussed in recent weeks, and it's called the ultimate oscillator. So this is now making a plan for extreme market environments rather than volatility extreme market environments rather than quiet extreme market environments. Hope that makes sense to you. But before we go into a discussion of the ultimate oscillator, since I'm not going to go deeply into its construction, of course, you can just come here, type in the word ultimate, and you'll find the ultimate oscillator. You see that right there on it kind of came and went. Right there in my thumbnail, you'll see the ultimate oscillator. Right over here. Anyway, traders have used this indicator for stock buy signals, almost ironically, for about the last 50 years. First introduced back in 1976. But let's add that ultimate oscillator to our charts. We'll click on Edit Studies. Let's type in ultimate. Don't even have to. Whole thing, just ULT will get you down to these 4. Let's add that to our chart. As a quick recap, we're looking at the last 7, 14, and 28-day sort of cycles. And what we're really attempting to see is over those time frames, our prices recently, well, are they closing closer to highs or closer to lows? If we're closing closer to lows, it might mean that that there's a lot of bearish momentum in the near term. And if there's a reversal of that, if all of a sudden we start closing closer to highs, that might be that we may be hitting an extreme low. Anyway, that's a simplification of this indicator. But let's click apply and click OK. And what we're left with is this oscillating line that a lot of the times doesn't really have a lot to add to the equation for the trader. It's really when this reaches quote unquote extremes that it gets more interesting to our trader. So what are extremes here? There are a couple of potential extremes when using the ultimate oscillator. There's 30 and then there's 40. So I'm going to draw in a couple of lines here just as visual reference points. There's not really any need. Let me just show you this. Somebody says, why don't we just draw these lines in? Why aren't they just already included in the indicator? Well, they just aren't. There are lots of different things that we might wish to be added to, like a moving average, that they're not part of the default indicator. But these extremes that I'm going to be talking about are just, we just look at the current value of the indicator. So we can always see that. See right over here, our indicator's value is 28. But I'm going to draw in some reference points just so we can talk about this conceptually, what a trader might be looking for. First of all, at 40, let's draw in a line about 40. I'll get that as close as I can. About right there. And then a second line might be at around 30. Here we go. I'll draw that in. I think I had that right about there. That's good. So the top one is 40. The lower one is 30. Because the range in potential values for our ultimate oscillator go from 0, which almost never happens, all the way up to 100, which again, or all the way up to 1, which almost never happens. But what our trader is looking for here is 40. I say 40 and 30. It's actually 0.30 and 0.40. Forgive me, I'm not going to say the point every single time. But when our oscillator falls down, most commonly below 40, and then starts to rise, for some traders, they may see that as a possible reversal point, especially if our Bollinger Band is outside our Keltner channel range. So the first sort of the prerequisite to building a trade around this strategy is to first check to make sure that our Bollinger Band is outside of our Keltner channels. Right? That's representing a more extreme volatility environment. Now we're looking for the edges of those extremes using our ultimate oscillator. Now I'm using 40 and 30 in a bullish market condition. What do you think we might look for in a bearish market condition? Yeah, 60 and 70 up here. But for the bulls, and that's really what we've been dealing with for the bulk of the last several years, we're going to be using the 30 and 40 lines. So you can kind of see here where our ultimate oscillator has dipped down below 40, and the moment it starts to uptick, might be a signal, hey, Cameron, we have reached an extreme on price if our Bollinger Band is also outside of our Keltner channel at that moment. And it may be time, and it might mean that we've reached that extreme, and there could be a reversal about to happen. And let's look at some more examples of this. Let's see if we have some more here. This one, you'll notice, I should have stated this. We also look for price to be outside of the Keltner channel. Okay. But in this case, we did get below 40. Is that right? Yeah, we got below 40 right here. Our price, though, was kind of hanging out inside the Keltner channel. It doesn't mean that it's untradeable. It's just that in this approach, typically, this trade would not be taken. What about right afterward? Yep, here's another example. We're down below 40, start to reverse, and that might generate a signal here where price is outside of our Keltner. Our Bollinger Band is outside of our Keltner, and we're reaching one of those extremes. Here's the difficult thing with trading this sort of an approach. Look at what's happening on our price chart. How do you think the general investor sentiment is at this moment? When our oscillators our channel lines are saying, hey, Cameron, we're kind of in an extreme, eyes up. And our ultimate oscillator down here is saying, hello, trader, we're at an extreme. It might be time for entry. Sentiment at that moment is probably not going to be terribly strong. It's been a rough go in recent days and weeks. So this is going to be counter to a lot of the headlines that a trader is likely to be reading at that moment. It's going to be counter to a lot of what talking heads on TV are going to be saying about the markets at that moment. But that's just what an extreme trader is looking for. And do we have another example back here? Yep. Price and Bollinger Band outside of the Keltner. We reached down below 40. And in this case, did we quite get below 30? Not quite. Not quite. All right. But I think you get the point. That is a potential entry signal. We'll talk about exits. But there are other times when we get an even more extreme. And that is when we get down below 30. For some traders, they're more sticklers for the true extremes. And they may ignore these little departures below 40. They look for more extreme events because they might see more upside potential if that extreme event reverses. Paul says, how does this compare with RSI? Paul, so it's fair to say there are similarities in just about every oscillating indicator. So the ultimate oscillator, by its name, sort of gives it away. It falls in the category of oscillating indicators, which simply means they're indicators that go up and down over a horizontal axis over time, rising and falling and rising and falling. Lots of them out there: MACD, stochastic, RSI, CCI, ultimate oscillator, awesome oscillator. All of these we've talked about in recent weeks. So they're similar in that respect, but they're all constructed differently. So there are cosmetic similarities, and then there are functional differences among them all. I'm not going to do a side-by-side because it would take us too far off track. It would require that I explain to my audience what an RSI is, and then compare it to our ultimate oscillator, and then we'd be way off in left field. But no, it's a good question. I just can't really give it, I say in these sorts of scenarios, I can't do justice to that question right now. So I'm just going to park it. Is that okay? Anyway, yeah. Kevin, I can't comment on this. Kevin says a contrarian view is often the most profitable if chosen wisely. That's certainly possible. Saying the most profitable as compared to what? That's a big statement. But for some traders, they do prefer to look for the more extremes. And so for them, they'd say, hey, forget the 40. I'm going to look for the more rare signals, which means I'm going to be trading in the most extreme environments, which means, is risk going to be up there? Absolutely. But is reward potential conceptually going to be higher? Possibly. Yeah. So this sort of a trader sees an event like 11 down days as setting the plate for just the sort of trade they might be looking for. So in this case, they'd be looking for our ultimate oscillator. So as a pre-qualifier, Bollinger Band outside Keltner. Then we look down here for our ultimate oscillator to go down below 30. Doesn't happen very often. It's only happened once on the Dow in the last 12 months. So are they going to have to dig harder to find signals? Yep. But hopefully there's a better payoff for them. That's their objective anyway. Yeah, so when we get that reversal here, that's an entry. Now, whether we're looking at the 30 or looking at the 40, generally the management of targets and stops is pretty much the same. So targets, fun side of the trade. With either of these, a common target is just getting back to the upper Bollinger Band. So let's look at recent examples here. So here might be our entry with a conceptual target up there at that upper band. Here was an entry. We might have had to wait for a while, but hitting the upper band right there. Is there another example back here? I think there is. So here, it might have been a trade from here to there. And this one's down below 30. Here are a couple of false signals on the 40. So here we might have had, a bit of whipsawing around. Doesn't necessarily mean that the trader doesn't actually typically use the oscillator to get back out of the trade, because some of those trades would be very short term. But just be aware it can give a string of signals pretty quickly. Whichever one we took here, we might have been looking to get out somewhere like that, just when price reaches that upper band again. Daniel says, did you say price should be outside of the bands? Yep, that's typical, Daniel. So as an example, right here was a signal. You can see that our oscillator was down below 40. Our Bollinger Band was outside the Keltner channel line, so it seems to be qualified, but our price was still firmly inside the Keltner. It's kind of in the middle. If we're in the middle of recent activity, is that extreme? Let me throw that out as a question. For a trader who's looking for extremes, well, if we're right literally at the definition of average according to these indicators, is that extreme? Probably not. Nope. So that would sort of defeat the purpose of the entire premise of this trading approach. Now, does that mean the price didn't just go ahead and go up anyway? No. As a matter of fact, there was a little bit of short-term upside potential for a bull here, but it wouldn't necessarily have been considered a valid entry using this approach. Okay, so now let's go look at this on a stock chart. We've been talking about this using the Dow, and if you wanted to, even as we move to stock, we could look at, it'd be interesting just to see what's going on with our other indices right now. Doesn't look like the NASDAQ reached quite the extreme of the Dow. I don't think that's surprising. NASDAQ had 2 red candles. Dow had 11. But in any case, yeah, the ultimate oscillator value is at 45 right now. NASDAQ's not even trading outside of its Keltner channel. As a matter of fact, it's right dead center in the middle. Let's see what's going on with the S&P. If the trader's wondering, is the S&P at an extreme range? It did move outside of its Keltner channel, stretched down to that lower Bollinger Band, and we did get down to, what was the low on the S&P? 27. Yeah, that's actually a pretty low on the S&P. Only been a couple of events this year. Let's look at some of these. So here's our ultimate oscillator. Back there on April 12th, starting to reverse. Was that a decent signal for a reversal of extreme moves on the S&P? In that case, it turned out to be. Here's one that didn't pan out so well. Not for a while. Here, our ultimate oscillator got all the way down to 26. It was saying, oh, you know what, Cameron? Clouds have parted. Sunny days ahead. And then, boom. Yeah, so is it perfect? Nope, nothing's perfect in technical analysis. So let's go back here to our stock chart. Here's JP Morgan Chase. You can see there have been, if you want to, you can just glance to see, squeezes, see if you can get some quick practice with that approach. But what's been happening now? Oh, look at our prices already covered inside a Keltner channel. It's ruining my example. I don't care. I'm going to talk about it anyway. Our trader here looking for an extreme may note, how low did we get right here? We got right down to 30. We got down to 28. So this is one of those more extreme lows. There was another one right here, and that one was pretty good, it turns out. But you already saw on the S&P, it's not always perfect. So our trader may look at this and say, well, the Bollinger Band is outside the Keltner channel line. Price has already snuck back in. Well, I'm not in control of that. When I'm preparing a webcast, sometimes market conditions change. In this case, it's just going in the intended direction anyway. But let's just say that and maybe you can't even see that. Let me zoom in a little bit. You can see how that our candle is now trading just inside the Keltner line. Some traders might say, I'm getting a little bit late on this extreme entry. Others might look at this and say, well, there's still some room to the upside here. Even if we get in now, if we move toward that upper band, there may be enough to justify a trade. In any case, assuming an entry here, when would we plan to take profits? Well, just as I've introduced here, trader might plan to take a profit as we get back up to our upper band, if that happens. If it doesn't happen, they might look to recent lows and just go a little bit below those. 1% below the low is a pretty common exit, but there can certainly be differences of opinion there. But there we go. There are two sort of complete round trip plans for trading extremes in the markets using Keltner Channels, using Bollinger Bands, and even recruiting that ultimate oscillator to plan and place trades for quiet trading periods, or for the opposite end of the extreme spectrum, for extremely volatile trading periods. We just always have to be aware. Sometimes the trade works, sometimes it doesn't. So the trader probably wants to have a plan for either one of those eventualities. All right, everybody, time for me to let you go. We did accomplish what I set out to do today. I wanted to provide this introduction to this combination of three indicators. I always enjoy these advanced charting techniques discussions. So hopefully you'll be putting it in your calendar to join me in future webcasts in this series, because yes, I will be continuing with this series in 2025. There are changes coming to our calendar. I think most of you are aware of that, but let's go just quickly revisit. If you go to schwab.com/coaching/webcasts, right up here, you can find our calendar of upcoming events. And if you just push this calendar forward to January, you can see the changes that are on the slate. Now, this webcast series is not changing. There's our advanced charting techniques, still at 1 o'clock Eastern, still taught by me, but boy, there are lots of other changes to my calendar. Pretty much the rest of the week, it's getting shifted all over the place. So I'll now be teaching trading covered calls and short puts on Monday. We'll be doing getting started with options on Tuesday. Then we're off to getting started with ThinkerSim. So that webcast series is moving from Monday to Wednesday. On Thursday, long verticals and diagonals. I'd love to have you in any of those. That's something new every day of the week from me. So really looking forward to 2025. My calendar is filled out. I hope to see you in those events. I also hope that you have subscribed to our Trader Talks channel on YouTube. Make sure that you're subscribed, because this, as you've already seen, this is the place to come find in a searchable way our previous webcasts, and they're also organized by topic into playlists, which is fantastic. You could also join our live streams right here. Doesn't cost anything to subscribe, so you can just go down, click on the subscribe button right now, and then you're subscribed to our channel. Also, make sure that you're following Connie and me on X. You can follow Connie there at Connie Hill CS. You can follow me on X at Cameron May CS. It really is just the best place to connect with your favorite presenters in between these live streams, and it doesn't cost anything to follow us there. So love to see you there on X. Everybody, thank you for all of the thumbs up. We have 165 people that were watching, that have been watching. 59 have already clicked the thumbs up button. Thank you. There's a like button there on YouTube. If you enjoy a webcast, make sure that you click the like button before you leave, because it gives a pat on the back to your presenter for their efforts. It also just gives my webcast a boost in the YouTube algorithm so that they find a wider audience. So thank you for doing that. Thanks, Connie, for helping out. Chats. Everybody, go enjoy the rest of our webcast through the rest of today. Have a great weekend. I will see you on Monday. It's an abbreviated week next week. So this will be the last time I do this webcast series for 2024, but I'll be right back 2025. So I will see you then, everybody. I'll look for you in future webcast series. I'll definitely look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.